Hello, Conrad. Good to see you. Reporting day at Clariant. It's even more busy than usual because we have made a big announcement today with the agreement with Lucas Meyer Cosmetics. Let's start with that. What is your view on this big step for Clariant?
Yeah, thank you. Good morning, Kai. It's been a busy day. It's been a busy week. And I would like to thank very much the teams at both Lucas Meyer Cosmetics as well as the Clariant team for their hard work to make this into a success.
And what is your view on the Lucas Meyer business as such? Is this the bolt-on move that you have been talking about for some time as part of our strategy?
Yeah, this is very much a fit to our strategy, which is all about, as you say, organic growth and bolt-on acquisitions in our most attractive segments.
Yeah, looking at the portfolio, Clariant also has personal care products. How would you say do the new products that come from Lucas Meyer now fit to our portfolio? Will they simply be integrated? Is it an add-on? What exactly is the rationale behind it?
I would say the portfolios are very complementary. So if you look at the Clariant portfolio, it is very much about chemistry that enables a cosmetics formulation to basically work. So we sell mild surfactants, we're selling rheology modifiers, we're selling dispersants. If you then look at the Lucas Meyer portfolio, it's very much about the actives, the materials within the surfactant formulation that bring a certain benefit to your hair, a certain benefit to your skin.
So you would say that what we are offering is actually the more traditional chemical technical application, the formulation expertise, while Lucas Meyer is more almost like a pharmaceutical company because they build very much on clinical trials. They have experience in the impact of these products on the real human beings, so to speak. Is this how we could summarize?
Yeah, I think that's a good summary. So we provide obviously our chemistry expertise. We have application labs where we analyze formulations, cosmetics formulations, and where we make them work. If you look at Lucas Meyer, indeed, considering their pharma background, they are very much focused on proving the true efficacy of the product, with us as humans. So they run these through these clinical trials, and this is increasingly important because the products that Lucas Meyer sells, almost all of them are substantiated by these claims that they can make based on these clinical trials. So they're proven to be effective, and increasingly this is very much what consumers are asking for.
Yeah, I was just going to ask. We have seen high growth rates in the past. Now, the question is, what makes you confident that we will continue with these high growth rates looking to the future?
Yeah, so we've seen high growth rates in the past. Typically, the cosmetics ingredients markets have grown by roughly 7% per annum. If you look at Lucas Meyer, they have consistently been able to grow above that. So they've delivered consistent growth around 10% per annum. Moving forward, we are very much convinced that they will continue to outgrow the cosmetics markets because exactly of the fact what we just discussed, the Lucas Meyer products actually do work. They are providing substances that remove wrinkles under your eyes. They're providing substances that prevent hair loss. And it is all substantiated by clinical trials. And that's actually very much what the consumers want.
Yeah, Conrad, thanks for sharing this. This explains the strategic rationale and also customer benefits very well. We still paid $810 million, which is quite significant. So how can you justify the price for this acquisition?
Yes, Kai, when you look at the valuation, it's important to note that this is arguably one of the most attractive segments in specialty chemicals. So if you look at precedent transactions in this segment, typically what you've seen is multiples, transaction multiples well above 20 times. So we actually feel that we've been able to take advantage of the current environment where some of these multiples have come down. And we're actually very pleased with the final valuation that we were able to achieve of 16.3 times EBITDA. Maybe a few other comments on it. If you look at the metrics, revenue growth, EBITDA margins, cash conversion, all very accretive to the Clariant performance. And finally, from a shareholder's point of view, I think it's important to note that this transaction already will be EPS positive in year 2.
Yeah, thanks a lot for sharing your insights here. Let's not forget the numbers. So we delivered Q3 performance indicators. What is your overall assessment of the last quarter?
Yeah, overall, we were quite pleased how we finished the quarter. Let's keep in mind that trading conditions have not improved yet. We haven't seen a pickup in demand for durable goods yet. Overall, our volumes were down about 5% compared to last year's quarter. Pricing was down roughly 3%, but this was in an environment whereby raw materials were down 16% year on year. Finally, what was very encouraging is to see the sequential improvement from the second quarter. Our volumes were up 2%. Our EBITDA was actually up 21% from last quarter.
So what's behind that? I mean, is it more cost-driven that we were simply able to reduce our costs accordingly? Was it more the pricing aspect? What exactly led to this significant improvement?
Well, all of these factors led to this significant improvements. In the current environment where we now see deflation in our raw materials, it is very critical that we hold on to our pricing. And indeed, delivering the cost programs, the cost savings programs is very critical as well. I'm very pleased that out of the target of 170 million Swiss francs cost improvements, we've already been able to achieve more than 120 million Swiss francs right now.
Very good. Now, of course, the big question is how we will continue in the fourth quarter. We see the market, like you said, has not really changed that much. But what are the market drivers that we're now observing since they will have an impact on our numbers?
I think the biggest market driver for us still is this shift in consumer spending away from durable goods to services. That has not bounced back yet. That will still take a few more quarters, and we expect that to happen more into the next year. So the demands will continue to be rather weak. We are seeing further easing in raw materials. So in this environment for us, it is important to hold our pricing, to deliver the cost programs, and we're quite confident about all of that. And that's why we've confirmed the guidance also for the years.
Plus, of course, the midterm guidance, we have 2025 targets. Are you confident that we are also well on track to get there?
Yeah, with regards to our 2025 targets, what is important to note is we are right now in a deflationary environment. We're managing our pricing well. So it is important that we see underlying that we're targeting further margin improvement across the board. What is important is if you look at our cost base, that we deliver the announced cost improvement targets. And what's going to happen then if and when volumes come back, the company will be a lot more profitable than it was before the pandemic, before all of the challenges that we went through.
Thanks very much for this optimistic outlook, Conrad. Wishing you all the best, and we will talk again soon.
Thank you, Kai.